It's a Saturday, and so I guess we could count this as an emergency interview. Look, I think everyone's reeling from the Trump administration's announcement this week of the imposition of substantial tariffs on global trade. We believe this policy has potential substantive negative implications for the economy as a whole, the tech sector in particular, and advertising technology. To us, this just feels like bad policy. It seems to be addressing the industrial policy of the last century when manufacturing drove the economy. But look, the US is a huge exporter of services and technology, far more important in today's and tomorrow's economy. And as a student of economics, I've always understood tariffs as a selective tool when someone was, say, being a bad actor, not as a broad economic policy. In fact, spent the last 2 days scouring the web for positive takes on this policy, even amongst the administration's most ardent supporters. So far, I've not found anything. And just to frame the impact, let's remember where we were prior to these tariffs. After a couple years of macro uncertainty in 22 to 24, things started to move in the right direction, right? Interest rates were coming down, employment remained strong, recession fears had largely dissipated, and companies started focusing on growth with an uptick in M&A deal activity and continued growth in the shift in digital ad spend. And now, the industry trends were not all good news, right? We had ongoing questions about the open web persisting as companies in the sector position themselves for shifting data landscape, green shoot growth areas like CTV, commerce media, and the creator economy, and the big daddy, which is artificial intelligence. AI is, of course, a double-edged sword since it has both the power to augment the existing companies and the power to disrupt their business models completely. So that's definitely a focus of ours. Let's look at the data. In 2024, the public company cohort in advertising technology was healthy, with most companies hitting their quarterly earnings expectations and average 30% EBITDA margins. The Luma A index of public ad tech companies was up 53% for 2024, well above the Nasdaq's 29% gain. Then in the first quarter of 2025, the index was off 17%, which is double that of Nasdaq's loss. And that was impacted by the trade desk missing their first quarter in 33 quarters and AppLovin attracting short seller interest. And that doesn't count the last week of trading, which saw a further 11% decline in the index since the quarter's end. So what is the impact of the fundamentals of the ad tech sector? It feels like the short term is shock and awe, right? I mean, shock that the announced regime is so sudden, severe, and seemingly capricious. It seems like a policy based on trade deficits, not actual tariff reciprocity, as stated. And if you're Canada, it was based on a merry-go-round of rationales, from trade deficits to drug smuggling, which non-existent, to or barely existent, to annexation fantasies, and maybe even hockey match losses. So it didn't make a lot of sense, and markets don't like it when they're surprised, and policies don't have sort of rationale, let alone some lead time for them to sort of digest something as significant as this, rather than just being surprised. So the announced policy was not what was expected. In the medium term, it feels like there's both direct and psychological impacts of this policy. The tangible implications for such a sweeping policy include potential, re-rise of inflation, potential economic slowdown in the form of a recession, and a corresponding reduction of ad spend. And look, that would have a direct effect on reducing revenues and profits for companies in the sector. In addition to these tangible impacts is the effect on business confidence. I mean, markets don't like uncertainty, and across any variety of polls, it appears as though we're now at peak uncertainty, even higher than during the pandemic. So let's see. So far, that's a lot of negatives. What can we say that's positive about this move? Well, a couple things. One, it could accelerate the much needed rationalization in the sector, as the supply chain is still too fragmented with too many duplicative companies, and there's nothing like economic necessity to force action of reluctant sellers. It also will accelerate the underlying trends. If you look back the last 25 years, all the massive market disruptions tend to accelerate what was already taking place. Think about how search and social gained from the global financial crisis, and CTV and performance accelerated during the pandemic. So I think we can expect the industry's underlying trends to likewise accelerate. And look, economic hardship will probably cause more consumers to adopt ad-supported models over subscription. And yes, I'm talking about not only media, but also, some of these AI models, some of which are being driven on subscription. I do believe, despite the protestations of some of the AI large language models against this notion of advertising, that they will come around and have to deploy those in order to seek returns on the massive amounts of capital that they're deploying for energy and compute. But I think the biggest impact, in fact, will be in AI and its acceleration and the implications for both the principles of marketing, the marketer, the publisher, as well as the business models of ad tech intermediaries. AI is being used to cut out waste, making the supply chain more efficient. That's great. But an even bigger impact will be AI's application to make ads more effective, helping drive marketer outcomes. And we've heard a lot about outcomes. You've covered that topic substantially in the sector. I think this simply accelerates that, and that will have an impact of improving and augmenting the operating leverage of the businesses in the middle, which I think will in the long run benefit it. So companies that are positioned to utilize AI, whether there are existing companies who are adopting it. You have two choices. If you're an existing company, you can either derive your own AI solutions to enhance your delivery, again, efficiency and effectiveness, or you must acquire the technology from an AI first startup that can help you accelerate that. And I think that might be one of the silver linings and what will otherwise be, I think, a challenging impact of a pretty substantial and economic policy that sort of affects the industry writ large.
Terry, so I guess it's fair to say the outlook for deal making is cool at the moment. How do you sort of see things rolling out in Q2 or Q3, or is it too early to tell?
So strategic dialogue started picking up in the back half of 2024, and that continues. Of course, I can't imagine this is going to be positive for deal making, but some of the things that were happening or the rationales for M&A activity are unchanged, right? Eyeballs are still shifting from linear to streaming. Data is changing. AI is having a big impact. Those are going to continue with or without a tariff policy. We just have to gauge how it both impacts ad spend overall, and secondly, how it might affect overall business confidence.
And Terry, we're going to see you next month at DMS. Give us a little bit of a preview of the conference.
Yeah, so we've got a very exciting lineup at DMS. Everything from Artur Sadoun of Publicis, who's going to talk about their transition to a platform, to leaders from Google, the Trade Desk, and a big Amazon, and a big emphasis on AI. AI will take the center stage this year appropriately, as it is the single biggest issue impacting all subsectors of the industry.